Welcome back to Global TA. Today we're taking a look at volume and open interest to help you identify key trends in the market for trading opportunities. Now, why is volume and open interest important? That's what we're going to discuss in this video. It's going to basically be an in-depth guide, as with all the other videos in Global TA, this technical analysis series built for all those people, who were looking for these, $1,000 courses. People are charging ridiculous amounts. I'm like, hey, this information should be free. Anyone should be able to watch this, whether you're in Africa or you're in Asia. It doesn't matter, right? Like, you should be able to watch this. I'm recording this here in beautiful Tbilisi, Georgia. A lot of this series was recorded when I was in Turkey. The next couple of episodes, typically I record them once a week, usually on Sundays. This one I had to schedule out to Monday. But yeah, so anyways, with this course, the thing, we'll hop into the content here in a second, but the main thing I want to make sure you definitely are doing every single time is going back to the fundamentals. So with this course, I have a playlist on my channel, which will be linked down below in the description. It's called Global TA. And these are really time-tested investment strategies for trading in any capital market. It doesn't matter if it's Forex, doesn't matter if you're trading commodities, stocks, crypto, whatever it is. You can use technical analysis to your advantage. Even if you're not interested in trading, these fundamentals can help you if you're just doing simple spot investing, right? Like, even if you're not doing leverage or margin, all these key foundations, key fundamentals are vital, right? Like, these are things that ideally they would have taught us in school, right? I think everyone should know how to trade in capital markets, even if they don't use it, right? Like, it's, in my opinion, it's a little bit more important than learning like the state birds of the United States. I remember like in some history classes in middle school in the U.S. It's like we spend a long period of time just learning state birds or state capitals. It's like you can Google that shit. So that's why I made Global TA. Is I think this is a very, very important methodology to trading, to really making money and building wealth in capital markets while you have your downside risk capped. So that's why I really, really emphasize going and watching these previous videos, going and watching the first one just on foundations, paradigms, how you can trade in capital markets, then going over fundamental and technical analysis charts. I'm going over trading patterns and indicators, then more advanced things was in the previous Global TA, and going straight from there. So let's hop right into it. All right, so with volume and open interest, again, what you want to understand here is volume every single day. So if you're just looking at 24-hour volume, this is, by the way, the indicator here in TradingView. You can look at vol. If you go here to indicators and you just go volume, you can pop it up, right? So you can use different ones. Obviously, there's different strategies. You can test them out, whatever you want. Keep in mind, all these indicators, right, with technical analysis, they're just tools in the tool belt. So you don't necessarily have to use volume and open interest. Now, obviously, this is not financial advice, but I would recommend adding this tool to your tool belt, right? You don't want to be you don't want to be so much weight pulling down your tool belt that you can't work, right? That you can't trade in these capital markets efficiently. But once you identify, okay, like, for example, I prefer Bollinger Bands. I like Bollinger Bands as one of my indicators. I like to look at volume. I like to look at moving averages, some exponential moving averages, all things, sometimes the RSI, the stochastics, all these different things I like to use. Now, you can literally just trade off of simple. You could just literally trade off of support and resistance lines if you wanted to. Now, when you start combining these things together, you look for you basically are looking for confluence, right? You're looking for multiple tools in the tool belt that you can use to be more confident to trade with, and that's why volume and open interest are very, very powerful, because essentially you can identify these trends. Okay, so I think I'll talk about this kind of 4-step approach you can apply to actually identify, okay, how you can use volume paired with open interest and the overall trend, and here in a second. But first of all, okay, what really is volume? Well, like I said, in the 24-hour time frame, if you're just looking at 24-hour volume, which you can see here in each altcoins, by the way, on a coin market cap or most like coin tracking sites, you can see this 24-hour volume. Now, the 24-hour volume can only go up, okay? So at the beginning of the day, everybody starts with a clean slate. And volume is basically you can think about it as like the total action in the market, okay? So like, what's the total action going on in the market? And this is one way to view these things. And this is something where the volume's important, but it's kind of a blanket statement on this. When you look at open interest, you're basically looking at things more in detail, right? So like, volume would be looking at the car with the hood down. Open interest is you're popping the hood up, right? You're seeing the kind of mechanics, what's going on. And basically, open interest shows you the inflows and the outflows in the market. And this is very, very important because, first of all, you don't want to be trading in a market where the volume's $1,000, right? Like, I think at bare minimum, like the very, very minimum is $1 million. Ideally, you're closer to like $10 million when you're trading altcoins, because I mean, it's insanely high risk, high reward. But especially if you're investing large amounts, it's different if you're investing like $100, right? If you're just trading with $100, I mean, volume is important. Like, you obviously don't want to be the one moving the market, right? Which you can't really do with $100. But you want to be trading in a large pool. Just think about it like fishing, right? Like, would you rather be fishing in a tiny pond this big or fish in the ocean, right? Like where you have all these different opportunities. And that's really where you can build wealth and thrive in capital markets when you see this large volume. And as far as open interest goes, think about it like this. Here, I'll draw it, okay? So think about it like someone's running around a track, okay? So let me just draw this out just for fun, okay? So volume, for example, you can see right here, this is open interest. This is just one indicator you can use. But a volume is, let's say, someone starts at point A right here. They're going this distance, okay? So they're going, they're going around the track, okay? So this is them running. Now, this total distance, all of the distance covered, you could draw in a line like this, okay? So that's like, let's say, the volume of how far they traveled, right? So in that circle, let's just say it's a mile. So this represents a mile. Now, what it's not telling us is what direction they're going in, okay? So let's say there's two people running, okay? So the other person is running in this direction, okay? The other person's going here, and they're going like this. Now, in a market, it's all participants is what we're tracking, right? We're not just tracking this blue guy. That would be one trader. That would be one kind of a contract, right? So an open contract. And with this, everything's combined. So anyone who's trading in whatever market it is, whether it's BTC USDT, whether it's ETH USDT, whether it's Cardano, so ADA USDT, doesn't matter. The main principle is, okay, this is the total, like I said, the best way to describe it is, I mean, obviously saying volume, but the another way to understand it is just kind of like the total movement in the market. So these are two people running around the track, right? So now with this this other red line, okay, so, with this line, let's switch back to blue here for a second. It's the same, right? So these two add up together to make a longer move. So then volume would look like this. So you stack that on top of each other. And actually, this is just a micro example, obviously, right? This is very, very basics of volume. And someone who's more advanced would be, this is like a weird example, but I think for anyone starting out, this is kind of an easy way to understand it, right? So basically, all of these lines represent the total amount of action in the market, okay? So all of the trading of volume, right? So that's why you call it that. But when you think about this, at the beginning of the day, again, it doesn't show you which direction they're trading in. So it doesn't tell you whether these are long or shorts. That's what open interest does. And open interest essentially allows you to identify, okay, what's going on here? You know, is this, are people entering the market? Like, is this an inflow or is this an outflow? So are people leaving the market or entering the market? Now, the important thing is, open interest can go up, it can go down, and it can go sideways. So if it goes sideways, we could use this same analogy with the track, okay? So let's go here. Let me change this back, right? Okay, so let me change this back to red. All right, so with this, now what would happen in this case? They're both moving, right? So it's volume. Overall, this is adding up to more volume. But what's very, very important is they're going in different directions. So you saw that I drew the red line was going in the track this way. The blue line was going in the track the opposite direction, okay? So in this case with open interest, it would cancel each other out, okay? So this is where, you see someone going in and either like a buyer is having a long contract or a seller is having a short contract. So in this case, if they're both, if it's just trading hands and no one's leaving the market, there's no new participants and there's no leaving participants. This is something where it just evens out. That's where open interest would move sideways. So right here, for example, we've just moved sideways in open interest. A good example here on I'll show you here on Binance so you can see these things a little bit better. But there's a lot of ways to gauge open interest. And again, I'll tie this all together so you understand it a bit better. But let's see. So for example, right here, I mean, open interest was increasing. It's been increasing from, this is just on today. So it's just been slowly rising towards the upside. And we've seen a drop in open interest. So what does this mean? Well, people have left the market. Now, people have been slowly entering the market. And what this basically shows you is a bit of a trend shift. So if the overall trend, which you can use moving averages, you can use different things. So like, let's just use Bollinger Bands here. So if the overall trend here with BTC currently, let's just zoom in. By the way, this is on the daily time frame. So each of the candles, if you've watched the fundamentals, you know this, but each of the candles represent one day, right? All of the price action in that day. And also a good way to gauge it is, okay, the bug here. A good way to gauge it is, so the volume also you can look at literally just the height of the candle, right? So like when you compare, for example, this red candle with this green candle, you can see, okay, at the bottom of the wick in here, so obviously that's all the kind of price action within that time frame. The body of the candle represents the open and the close, right? So and it's reversed if you're looking at a green candle or a red candle. A green candle is bullish, red candle is bearish, right? Very simple. Same with volume. Now you could literally copy and paste this same distance in each of these on here because it's the total price action. So like these tiny candles here, you can see that they're very, very small in the volume chart. So that's another way to understand it, right? So just kind of putting all these pieces together. And what I was talking about here is this massive trend shift. Okay, so we switched bearish here, right? So we pushed down in the middle of the Bollinger Bands in this moving average. We pushed down, and remember the Bollinger Bands basically represent they're kind of like rubber bands, right? So as you go down, like you could trade this on the downturn, right? Like you could have traded this, but what I like to look for is a bullish confirmation. So for example, in one of the videos I made, which is like how to make $100 a day leverage trading, it's just a very simple strategy, which I'll be talking about in probably episode 7 of Global TA. So the next one will be on using an exchange, understanding isolated versus cross, margin leverage, all these different things, liquidation, stop losses, very, very important things with trading. And then in episode 7, I'll have more putting all these strategies together. So forming a trading strategy, back testing it, all these different things, building your own personal trading strategy, and being confident with it. So like customizing it to yourself. And the last one's putting it all together. So that will be Global TA 8. But like I was saying, so this downtrend here, you could see, okay, this bullish engulfing candle right here. So you see this body of this red candle is smaller compared to this next green candle. And that's obviously you have bearish engulfing candles. So let's find an example of a bearish engulfing candle here. So small green candle, large red candle. Okay, so that indicates first of all, we're on the top of the Bollinger Bands. So we were a bit extended on the Bollinger Bands. Then you see a bearish engulfing candle. That's a bearish signal. So that kind of indicated that move down. And that could have been a nice little trade there. Then you could have made there's a bullish engulfing candle. Could have made the trade there. And you kind of see this happening over and over again, right? So this is a bullish engulfing candle. That's a trade. So again, this is part of adding the tools to the tool belt, right? So when you see this negative trend, this bearish trend, okay? So how can you tell if this is going to reverse, right? Well, open interest right here was consistent. So you see, let's go back here to Binance, okay? So open interest, if we go to the 1-day time frame. Again, I'll have everything I talk about linked down below in the description, but you gauge open interest, right? So you look at, okay, what's been going on here? So what was going on during that time frame? Well, as the trend continues down, so we were in a bearish trend, if you see volume high, open interest high, that means most likely the trend is strong. Now, once you see open interest and volume drop off, it's kind of liquidated everyone out of the market. People are stuck. Like the people that were trapped in trades, they got liquidated. Like they're out of the trend. That's where you can start seeing a reversal. So that's what's most important. That's kind of what I'll talk to you about in this 4-step. And I actually have it written down in this notebook. Like I said at the beginning of this series, it's very, very important to just have a basic trading notebook, talking about different things, whether you're writing down, currencies, whatever it is. Having a basic trading notebook is very, very important. It's like one of the fundamental things I think you should have in trading. So I'll just basically break it down for you. So just to recap, volume is basically the total number of an asset traded during a set time frame, right? So that's very, very important to understand. So you can think of this like the sum of all movement in whatever market you're in. So that's what I'm talking about, the sum of all these movements, right, around this track up here, right? So that's why I added those lines. So measuring the distance, so that's what each of these volume things are. So measuring the distance of each individual contract in the market, okay? So, but remember, volume is it really can only go up. You can't really decrease volume, right? But with open interest, it can go up, down, sideways. That's very important to understand. So again, you're looking at the car, volume's like, oh, it looks nice. You can see the distance, but then when you open the hood, when you look at this speedometer, whatever, you look at maybe the GPS, you can see all the different directions it went in, okay? And this is like going basically a step further. So if you're only looking at volume, it's nice, but once you add open interest, you can get more advanced with it, okay? So then open interest, total number of outstanding long or short contracts for a given trading pair. So think of this as the sum of directions following you, whether the money is flowing in or out. So inflows and outflows, that's the most important thing. Then how to use these, okay? So how to put this together. What's a way that you can actually apply this in the market? That is the most important thing, because you can understand this theoretically. By the way, I do apologize. I think they're working on one of these houses here in beautiful Tbilisi, Georgia. So any hammering, just disregard that. I'm hoping you guys won't be able to hear it, but don't get too distracted. Don't lose the forest through the trees, right? That's the most important thing, okay? So let's talk about this, breaking it down in 4 simple steps. And I am referring to the notebook. Typically, I just go completely off freestyle, but I had written this down because I've used this. I think I wrote this down probably like a year ago or something like that. And I've used it. It's great in capital markets to use open interest, look at the overall trend, and you're looking at 3 key data points, okay? So you can even draw this out like this, okay? So if you're, for example, this will probably look kind of bad, but let's say you have your notebook, and let me just draw this out for you. So let's say you have a notebook, you want to draw this out like this, and this is going to look crappy, but just drawing it out like a little graph here, okay? So drawing it out like this, and using these three indicators, like you would fill in each of these boxes, okay? So this is just an example of how you would draw this in your notebook. This is going to be a crappy box though, okay? So you can see you would draw, first of all, the overall trend in this first area. Yeah, I should have just probably described this, but I hope you guys understand what I'm saying, just so it's easy to see. So this is like each of these data puts, you can put the first one in here. So the overall trend, that's what we're going to look at first, is identify the overall trend. So are we in an up or a downtrend? Back to that example with the Bollinger Bands, right? So in here, we were in this downtrend, right? So we pushed down on the Bollinger Bands. We had this bearish engulfing candle. We were in this kind of this bear, little bit of a short-term bear market, right? So you see this, at least in the Bollinger Bands, and it's nice because you get to see, okay, the trend is bearish, right? So that's the trend. Now, we don't know how strong this trend is, because if you're just looking at it as, okay, what's the trend? That's very surface level. Like that's just one tool in the tool belt. That's just having a hammer. But then you want to add a saw. Then you want to add a screwdriver. All these different things to it, right? So and that's adding open interest. That's adding volume. And the trend you can write here in these first boxes, right? So this would be, you would write macro trend here. So what's the macro trend? In this case, we're bearish, right? So we were bearish right there. Next, we'll go to once identified, you can actually take a look at volume and open interest. So this one can be volume, this one can be open interest, right? Okay, so write down these three data points. So you have trend, up or down. So is the trend bearish or bullish? If it's bearish, down. If it's bullish, it's up, right? But again, you just know that from a surface level. You don't know how strong the overall trend is there. Now, you have volume. So either this can increase and decrease, or you have open interest. This can increase or decrease. So, for example, here, open interest is increasing. Volume here, open increase was increasing here, decreasing here, right? So this is the same thing if you look at right here. So open interest, we can see right here, it was increasing, right? Okay, so now decrease a little bit, increasing again. So that's where you would write down in these given time frames. So right here, okay, let's say it's June 8th of 2021. Maybe in your trading journal, you're tracking this, writing it down on paper, you're using the open interest, you're using the volume strategy, and you're going, okay, what's the overall trend? Well, most likely we were bearish at that day, if I remember correctly. Is the trend, we understand this macro trend, we don't know how strong it is. Now we look at volume and open interest. So if volume is increasing and open interest is increasing, this is what you want to look for, what it implies. So this is when you combine all these things, when you have these things written down in something like this, right? Like a nice little chart there, you can go, okay, once I have those three data points, now I can go, okay, what does this imply? Because just because you have those data inputs doesn't mean anything, right? Like it's just like, if just because you have a degree doesn't imply that you know exactly. Like it means that you've checked the boxes, you've done well on tests, you've done well on theoretical things. But when an employer wants to hire you, they say, okay, what does it imply? Well, do you have experience? Do you have good references? All these things most likely imply a little bit better than a degree, especially in the current day and age, that you can do the job. You can actually solve the problem at this company. And just, there's a bunch of different analogies that I could apply to that, but you basically want to look for, once you have these data puts, what does this mean? So what can I translate that into? And really when volume and open interest are both increasing, so when you see both of these trends, so for example, right here, let's say, and by the way, I'm just purely using this as an example. You don't have to use this indicator, but when you see volume increase here, when you see open interest increase here, that means that it's a strong trend. Whether it's bearish or bullish, doesn't matter. So if you would have said this is a bearish trend, you have an increase in open interest, increase in volume, the trend is going to be stronger. So that means most likely it will continue, okay? So you can decide what you will with trading that, right? Like that's another tool in the tool belt, just like a hammer. You can either use it to pound a nail, or you can use it to accidentally hit your hand. It's all up to you, right? Like that's why some people say, oh, I'm too afraid to trade, I'm too afraid to do these things. Well, it's just like training martial arts or training whatever it is. It's building a skill. And especially with this is beautiful because you can do it throughout the rest of your life and invest in capital markets. So putting this together, you have volume, open interest. We talked about when it's increasing, when the trend is up with volume and open increase or open interest. It doesn't matter if the macro trend. So remember in this box we talked about the macro trend. Here it was bearish. That means if both volume and open interest are hitting these highs, that means that most likely the trend is strong. Now, if open interest and volume are decreasing, it's their inverse, right? So if the overall trend is bearish, volume and open interest, for example, here, decreasing, right here, decreasing open interest, decreasing volume, that means that the trend is weak. Okay, so that doesn't necessarily mean we're going to reverse, but so that's why I was saying, like, people get liquidated, people get stopped out, and that's where you could see a bit of a reversal. Now, when you combine this with moving averages, when you combine this with RSI, when you combine this with all these different things that we've talked about, that's when you can build a trading strategy. And when you go, okay, maybe open interest and volume is not for you. Maybe it's a little bit confusing. Maybe you can work on it a little bit, rewatch this video, go watch other videos. I just recommend, you can Google these things. I mean, if you don't find this video to explain it well, this is explaining it like the first time around. I plan to probably do an updated version of Global TA like a couple months from now and redo some of these courses because it's just the first time around. Again, it's all free, putting it out there for everyone to watch. Again, so anyone can trade in capital markets. The main thing is putting it on yourself to become curious. Don't go to the point where you're just like, if you can Google something, Google something. It's very, very simple. We have this tool, just like another tool in the tool belt, right, that you can use all day, every day. And that's the beautiful thing about volume and open interest is you can kind of identify these trend shifts, right? So you can identify, okay, is this trend strong or weak? If this trend is weak, you can potentially go, okay, I've identified that. That's one data point. Now I can look for, okay, what's the moving average doing? What's it doing on the Bollinger Bands? What's going on? What's the trend? Are we in a bullish, or are we seeing a bullish engulfing candle? Are we seeing a descending wedge? Are we seeing a head and shoulders pattern? What's going on? And then you can trade based on that. And I'm always with this. The most important thing is having your stop loss. So having risk management set up is absolutely vital in trading. Just to kind of recap everything. So like open interest right here, basically the total number of longs and shorts is basically inflows and outflows of capital, right, of contracts, whereas volume is the total movement. So the total movement around the track. And when they can cancel each other out with open interest. So when you have longs and shorts, and people are basically just transferring within the market, it's basically moving open interest sideways. When new people enter the market, open interest increases. When people leave the market, open interest decreases. Okay. Now, when you're identifying, okay, what is the opportunity to trade with? What are some altcoin opportunities to trade with? You want to look at volume first of all. So just at a surface level, like let's say you're on Binance, let's say you're on wherever you trade, FTX, FEMEX, whatever it is. You can go, okay, what's the volume doing? I want to trade, let's say your rule is I want to trade with anything over $10 million in volume. Well, there's a lot of opportunities here, right? But let's say then you want to go, okay, I'm going to take this a step further and go, I want to trade with only $100 million in volume. Then you can go, okay, just real quick here, let me add 1 inch to my watch list. So boom, add that to your watch list. Okay, and these don't have 100 million of volume. Now Curve Dow does. So maybe Curve Dow is added to your watch list. Maybe the graph is added to your watch list, and maybe you're just paper trading these, which I recommend at the start, right? Is paper trading these. And the other thing I did want to mention is so that's a way to identify potential trades. And then with those markets, you can look at them on TradingView. You can add them to your watch list. You can identify the trends, draw out key support and resistance lines, draw out, what are the macro trends going on? Are we in an ascending triangle? Is it a symmetrical triangle? Are we in a bull flag? Are we in a bear flag? What's going on here, right? So then you can go and use different things for open interest. So Binance has an interesting option you can use here. You literally just, I'll have this link down below in the description. Also, obviously, you can see volume on Binance just like on TradingView right here. And then this is the order book, which you can use the order book. Maybe I'll do that in a separate video in Global TA where I'm planning on doing, this 8-part series and then adding some things like a dedicated video on how to use like things like a Fibonacci extensions, how to use these more advanced things, how to really understand the order book. Although I'll probably talk about that in the next one, understanding how the exchanges work, isolated margin, all these different things, using on whatever exchange it is. So yeah, that's one way to look at it. Also, like I said, here on a Binance, they have open interest here. Very, very nice. You can go whatever asset you want. So like Bitcoin Cash, you can look at open interest there. And then you also have other places like Skew. So analytics.skew.com. They have what are you using? So you can look at it. Okay, what's the skew here? What's the spot? What are the options open interest? What's the options volume? All these different things. So that's pretty much it for this video. Again, if you have any questions or comments in this video, let me know in the comments or join the Telegram group. Highly recommend joining the Telegram group. Follow us on Twitter at investglobal_IO. All those things are linked down below in the description. But if you have any pressing questions, especially and you want like individual help, reach out to us in the Telegram group. Other people are there to help you. Experienced traders, experienced investors, all in that group. Also, definitely, like I said in the beginning of this, go check out all the other videos in Global TA. If you're watching this first, you're in the wrong spot. You got to go rewatch number 1, go to number 2, go to number 3, go to number 4. You can watch them again. You can watch the first time on 2x speed. You can watch the second time on 1.5x, and then maybe the third time on 1x. Like seriously, these are things where you want to be compounding the information, what you understand. So that's all for this video. Again, if you enjoyed it, hit the like button, subscribe to the channel, hit the notification bell to stay up to date. Go check out the playlist. Go check out all the links down below in the description. Again, any questions, feel free to reach out. Happy to help at all times. Again, the main thing with this course is allowing access. I think information should be free for people to use, and I'm kind of a little bit disturbed with a lot of these people charging thousands of dollars for courses. So that's what Global TA is all about. So again, thanks again for watching. Just to recap, like, subscribe, and all, invest global, and until next time.